Hello and welcome to the latest Moneymakers Investment Trust podcast with me, Jonathan Davis. A reminder that for regulatory reasons, nothing you hear today, however stimulating and insightful, should be regarded as constituting individual investment advice or a specific stock recommendation. Them's the rules we have to work with. So on the podcast this week, I'm having a return call with Jonathan Simpson-Dent, who is the chairman of Edinburgh Worldwide Investment Trust, ticker EWI, the Global Small Companies Trust that has been in the headlines, mainly, unfortunately, for its sake, because of the attentions of Saba Capital, which remains its largest shareholder with around 30% of the equity. Jonathan, you've been chairman of this trust since March 2024 and on the board for a few years before that. Obviously, the reason we're having this call at this particular point is that Saba have requisitioned for the second time a meeting of the shareholders, which it is seeking to remove the board and substitute 3 new non-executive directors put forward by itself. It's nearly a year since the last general meeting that Saba requisitioned, which they were defeated in their attempts to take on the management of the trust. So can I start by asking your reaction to the news just before Christmas that they were going to have another go at requisitioning a meeting and changing the board?
Yeah, not surprised, but disappointed would be my summary. Not surprised because, Jonathan, during the course of the second half of 2025, they've been building their position. So this time last year, they stood slightly under 25%, and they've been building the position to slightly over 30% now. Disappointed because they've pointed to a year of inactivity by this board and a year of disappointment, which I think is at odds with our actual performance and the actual work that this board has undertook during the course of the year, including a number of structural solutions we've taken to Saba. So yeah, not surprised, but disappointed.
Well, we might come on to the solutions that you propose to them in a moment. But first of all, what do you think they are trying to achieve with this meeting? And what do you need to do in order to see them off? You've recommended shareholders not to vote for their resolutions, and you've put out a defense saying the reasons why you think that. But what do you think they have in mind, and what is your main argument against what they're proposing?
Well, look, I have to believe that his main intention remains what it was this time last year, which is to gain control of the trust, to boot out Baillie Gifford as the manager. He's been quite vocal through the course of the last 12 months about his disbelief in Baillie Gifford, and to change the mandate to a vehicle that is more in line with some of his other vehicles around discounted investment trusts, etc., under his direct management. One of the reasons I've written to him during the course of this campaign is for him to actually explain what his ultimate intentions are, because he hasn't said this time around. Last year, he was quite specific about it. This time, he's been silent on it. And I think that is hard for shareholders, because shareholders are being asked to make a choice when they only really understand one side of the story. So I think it's really, really important for shareholders to understand both sides of the story, which is why I hope he does come clean with our shareholders and actually explain what his ultimate intentions are. What we need to do this time, Jonathan, to the second part of your question, is we need to mobilize shareholders in greater numbers than we needed to this time last year, because he now has a larger position. So he has, like I said, over 30% versus sub 25 last time around. So we need more shareholders to turn out and have their say in an environment where this time last year, we had 6 fellow trusts under the spotlight, and therefore a lot of noise and interest publicly in the overall Saba campaign against the 7 trusts that he was targeting last year. Now he's just targeting us. So we are the sole voice this time round, and therefore we have to speak even louder.
Right. I think last time there was a 65% turnout of shareholders, which is quite impressive by normal standards, more than enough to see him off last time. But the point you're making is that you probably need to get at least that many and maybe more to turn out this time in order to see him off, given his increased shareholding and the fact that, as you say, there's less in the headlines than it was a year ago. Some shareholders might not have noticed, I guess, is what you're saying.
Exactly right. And look, we had a very significant turnout last year. And that turnout, by the way, was very skewed to people who didn't want the Saba future. They wanted the Edinburgh Worldwide future. Just under 99% of them, the non-Saba voters, said that they didn't want his solutions. So I see no reason why that will have changed in the last 12 months, but we need at least as significant a turnout as happened last year. And it would be very easy in this world for shareholders to say, well, it was all fine last year, so it'll probably be fine this year, so we don't really need to do anything. And one thing we're saying is that is not the case. We have a bigger block vote on his side this time round that we need to overcome. So if they want to see Edinburgh Worldwide continue in its current guise, they do need to take action and speak up.
What indications you had so far about your shareholders' awareness of this latest démarche? Have you had actually a lot of contact? How does it compare to last time?
Similar to last time, we've had a very, very strong reach out campaign. I've managed to speak to a number of them personally so far, and I will continue to do so over the course of the next couple of weeks. The vote itself is on the 20th of January. That's when the meeting is. A lot of our retail shareholders only have an opportunity to vote in the next 7 to 10 days because the platforms shut their voting earlier. So we've written to a load of them. We've got our trustee website up with video messaging going out on that. And we've got a phone campaign going to them to make sure that they're aware of the situation and will vote. And look, just to your question about how many are actually aware of it, I hold my own shares through 2 different platforms. And in one case, one of the platforms that I hold my shares through, I'm not going to name and shame them, but one of the platforms, when I log onto my account, doesn't even tell me that there's a corporate action against Edinburgh Worldwide, one of my holdings on that particular platform. So the platforms are still hit and miss in terms of communicating proactively to their clients. And therefore, many shareholders, there's a risk that they simply don't know what's going on.
Right. And that would be particularly disappointing, particularly because I think everybody was encouraged last time that the platforms were sufficiently engaged that they actually did help to get the vote out, at least. So that's where we are. We've got the vote coming up on the 20th, as you say, and if you are a shareholder, you need to get your vote in early, particularly if you are holding your shares through a nominee account on a platform. Let's talk about your engagement with Saba over the last year. Since the vote last year, you said in one of your recent announcements that you've had multiple contacts with them. Can you, first of all, characterize in general how those conversations have gone? And then we might come on and talk about the specifics that we know about the proposals that you have put forward, which you wanted another shareholder support on.
Yeah, sure. And look, 2 different types of interaction. One interaction I describe as normal course. So, periodically we give our shareholders updates on what's going on in the trust. 2025 was a particularly important year for us because it was the first year of delivery of our new strategy, the Path for Growth strategy, that we wanted to see yield results. So it was important that we were talking to shareholders about how that was going. So as you'd expect, periodically, we had interactions with them to explain what we were up to, how the strategy that we communicated in Q4 2024 was actually playing out in 2025. So those I described, categorized as normal course that we'd have with shareholders every 3 to 6 months. The other type of interaction was more on their medium-term thinking and their expectations about how they wanted this to play out for them. Again, in Q4 2024, we'd announced a capital return at scale to the market, up to £130 million. So as you'd expect, we took a couple of proposals to them about how that capital return could be executed. We took those returns, one about Q2 in 2024 and 2025, and one in the start of Q4 2025. And in both cases, they said no, they weren't interested in a capital return at scale that we'd, of course, offered to all shareholders. And then the third interaction was around a proposed merger. It was early on in our thinking. And, of course, before we committed significant costs and did a ton of detailed work on any proposed merger, we'd want to speak to our largest shareholders. So we took that to them and they categorically said no. Just in terms of the style of interaction, for the first period of the year, it was easy to get to Mr. Weinstein's colleague, never to Mr. Weinstein directly. In the last quarter of the year, they've tended to want to speak through our broker rather than to me or the company directly. So that's made it harder because, in my view, it's always easier when you've got principal to principal discussions where you can try and sort of seek proper ways forward.
So if we look at those 2 proposals, the capital return and then the proposed merger, just to be clear, these are 2 separate ideas that you've taken independently to the shareholders. And the first one would have involved a tender offer. And the second one, the merger, would also have offered your shareholders an exit up to about 40%. So you made the first proposal and that was rejected. So was it then that you started thinking about the merger, or was that always been an option that you've been considering before then?
Look, I think if I look back at 2025, we had three main topics on the board's agenda. The first was, let's see the new strategy playing out and starting to work, the path for growth strategy. So yeah, there's a lot of eyes on that. The second was we'd announced a capital return of up to 130 million. So we developed a couple of different proposals for that. Like I said, one in Q2, one in early Q4. So we had a couple of different delivery mechanisms for that capital return. And then in parallel, for probably the last 6 months or so, we'd been at least considering merger options, because in this market, with a sector where wealth managers are ever increasingly focused on fewer, larger investment trusts, we're getting a message that scale can matter. And therefore, we had to at least explore whether we should merge, and if we should merge, what sort of people we should merge with. So yeah, we had a watching brief on mergers for a couple of quarters. We had some active discussions with a couple of potential merger partners to really explore whether there was an idea here that could create shareholder value. And so yeah, that work was ongoing through 2025.
So you did talk to some others other than Baillie Gifford US Growth.
Correct. Look, when we started exploring merger options, there were a couple of things that were really important to us, because we wanted something that held true to the Edinburgh Worldwide philosophy. Edinburgh Worldwide, we heard in February that people really like this mandate. People like it because we invest in transformative, disruptive, techie businesses. That's what people really like about this particular mandate. So it was really important, if we were to merge with someone, we found someone who had that same absolute philosophy and sweet spot. Secondly, we needed a go forward solution that had skills in both private and public companies, listed and unlisted businesses. And there are relatively few investment firms out there who have a skill set in both. So the merger pool was a reasonably small pool, Jonathan, if that makes sense. And when we got through that, we found a way with USA that we thought could be accretive for shareholders. Very happy to talk about that more, but for now it's parked because obviously it doesn't have the support of our largest shareholder. We won't be able to get it through, and shareholders really like us as we are.
Okay, so we'll come back to the USA proposed merger in a moment, if we may. I guess in terms of what you're selling to shareholders, your key message is going to be, we have a new strategy and it is working. That's going to be your main message about the trust recent performance. In other words, I think you're trying to emphasize the fact that the board has been decisive in taking action and it seems to be working, judging by the performance in the last 12 months. That, I think, is a key part of what you're saying. Now, Mr. Weinstein and his colleagues at Saba say that's all very well, but your 3 and 5 year track record is still very poor. So I guess the question for you is, do you think that you've done enough with the performance over the last 12 months to convince shareholders that better performance is not only here, but is actually here to last? Because, I mean, the share price is now only back to where it was 5 years ago.
Yeah, look, there's no doubt. And we have never tried to hide behind back end of 21, 22, 23 as difficult years from a performance point of view. We've never tried to hide away from that. That's why we did our work in 2024. This was about, could we find a way to fix that? Again, we know that people really like this mandate, but shareholders rightly expect the trust to perform. I would say, Jonathan, that one swallow does not make a summer. So we're delighted with performance in 2025. We have pretty well doubled the returns on the S&P Global Small Cap Index, which is our benchmark, not the benchmarks that Mr. Weinstein refers to, but our proper benchmark. So we've had a year of really nice performance there. Having sort of reshaped the portfolio, thinned it down, I look across the portfolio, across the top holdings in the portfolio, and think that it has loads of legs to run and deliver strong returns for shareholders for the future. If I didn't believe that there was proper excitement in this portfolio, then it'd be time to start taking a totally different set of alternatives to shareholders. I believe there's real excitement in the portfolio. I mean, our single largest holding, and I'm very happy to talk about SpaceX in detail because I think Mr. Weinstein likes to, our single largest holding, which is 16% of the trust, could become one of the most valuable companies in the world. And it is still in its growth phase. It's still in its early stages of ultimate sort of value delivery. So I think there's loads of legs in this strategy. I think there's loads of legs in this portfolio. And I think if shareholders like this particular focus, they'll benefit over the coming years.
I guess the point that he might come back on that, and we'll come on to SpaceX in just a second. The point he might come back with on that is that the board had several years to do something about it. It was only as you say, 2 years ago that it actually got round to tweaking things, changing the strategy and offering capital returns and so on. Do they have a point that basically maybe the board was too slow to get onto this, to dealing with the problem that emerged, as you say, after a very strong period before that, where you had issued shares and so on, that the board was a bit asleep at the wheel?
Look, there was so much going on in that 20, 21, 22, 23 period. Just look at the overall market. And, there was so much noise in the market. We'd seen this massive ramp up in 2020 in terms of the portfolio and the NAV, really significant growth and very, very rapid growth. And then it bumped back down. And guess what? He's picking up on that bumped back down period. Look, all I can talk to, Jonathan, is when I took the chair role on at the start of 2024, I was explicit with the nominations committee and the rest of the director group that things needed to change. And change it has, and change quite significantly it has over the last 2 years. So again, there's no doubt that mistakes were made in that 22-23 period. I'm not going to shy away from that. But we did our work in 2024 to learn out what those mistakes were, get them sorted out, and start driving the trust and the portfolio in a different way into the future. And that's what shareholders are benefiting from now.
Okay, so then coming back to the more recent events and SpaceX, obviously Saba Capital are making a great play of the fact that you actually reduced your shareholding in SpaceX. And since then, there's been more speculation about their IPO may be imminent as opposed to just something that could happen in due course. And the portfolio managers have left some money on the table by reducing their stake. Now, of course, you're not running the portfolio, the managers are, but presumably with a significant disposal such as that, they would have come to you with the details of what they were proposing to do, and the board presumably signed off on that. So what was the thinking behind that particular decision? And is it in any way tied up with the fact that you already have 30% of your holdings in private companies and so on? The more valuable SpaceX becomes, the bigger the private percentage of your portfolio also becomes.
We expect the managers to operate within decision-making frameworks. So they can't just be shooting from the hip and making decisions without any sort of discipline and process around it. And we really scrutinized that framework during the course of 2024. I think with SpaceX specifically, this has been a long-term hold for us. And, with any large holding, where any large holding becomes sizable within the portfolio, above 10%, we will always look to whether it makes more sense to trim it or just to keep going with it. And the manager will make decisions periodically on that. And bear in mind, SpaceX now has quite regular liquidity events through internal employee tender offers, etc. So there's reasonably frequent liquidity events that allow us to trim should the managers choose to do so. The consequence of having one investment in your portfolio that's north of 20% of the NAV just gives you sort of a concentration risk that I think is not helpful to the broader shareholder base. It also limits what you can do elsewhere in the portfolio. So, we have a framework that says circa 25% of the trust should be in unlisteds versus listeds. We are now at the high 20s, having trimmed SpaceX. Being north of 25% of our net asset value in unlisteds means we can't take any new positions in other unlisteds. So we are capped out from taking new positions in the next SpaceX that could come onto our radar. So we've made a almost 1,000% return on SpaceX. It's still the largest conviction holding in the portfolio. If it IPOs in the near future, great, happy days. Shareholders will benefit hugely from that. They already have benefited significantly from our 7-year hold of this investment. But we make these decisions carefully, and we like to keep dry powder to be able to invest in other exciting businesses. We do not want to be a one-hit wonder.
Right, because I know that Mr. Weinstein made a lot of fuss about the SpaceX holding a year ago. That was one of the things that really attracted him to the company, he said. Were you aware of the risk that he would then seize on that as an example of something that the board or the portfolio managers have done wrong?
No, not really, because again, I think he's missed the point somewhat and ignored the fact that this has made an almost 1,000% return. So, this has been a spectacular return. And I just think that, of course, there's always the benefit of hindsight. And should you or shouldn't you step off as and when you did? We had those questions all the time during the rapid ramp up of Tesla and other long holdings that have benefited shareholders really, really well. It is still our largest conviction position by some way. It has still some upside, significant upside to go. And I think shareholders should be delighted about that, not criticizing us for that.
And just on the timing of that, was that decision made before you started exploring a merger proposal with Bailey Gifford US Growth, or was it laying the ground perhaps for that merger?
Totally unconnected. Just for the avoidance of doubt, I think, we expect the investment managers to be running the portfolio and really focused on day-to-day running of the portfolio. The board was leading on the merger discussions, not the manager. So this is not something that Bailey Gifford drove. It's something the board was driving. In the case of a private company like SpaceX, you can't just sell it in the space of a week. There's quite a long run-in period to a sale. We're beholden to shareholder agreements with that particular company. We're beholden to confidentiality rules that mean that we'd never pre-trail this with any individual shareholders or with the market in general. And it takes months to execute a partial sale of an unlisted investment. So, no, these are totally disconnected. And that was a process that had been going on for some time before we actually trimmed.
You are listening to a Moneymakers podcast. We are an independent research and publishing venture and grateful to JP Morgan Asset Management for their generous no-strings financial support, which enables us to keep the podcast free and our editorial principles intact. Each podcast episode goes live shortly after being recorded, with a weekly catch-up email notification every Saturday afternoon. Why not also try our premium weekly subscription Moneymakers newsletter, which provides a comprehensive summary of all the latest news, results and performance data from the investment trust sector, with links to the relevant stock exchange announcements if you want to go down that rabbit hole, and many other regular features including more than 170 in-depth and independent trust profiles, regular market commentary and videos, plus the editor's list of favourite funds. If you never want to miss a thing that might affect your portfolio, do please sign up today at money-makers.co. And if you follow this podcast on YouTube, please do use the subscribe and like buttons. Thank you. Coming back to that proposed merger, you say you talked to more than one potential merger partner, but it was a pretty small pool, certainly with the unlisted expertise, as you said. Are you saying that having considered this merger idea, that doing it with Bailey Gifford and another listed Bailey Gifford Trust was clearly the best merger option available? I presumably thought it was the best option, but was it clearly the best option given the other issues that might be around that? Again, I must refer back to what Saba Capital is saying. As I understand what they're saying, this is basically an attempt for Bailey Gifford to put two companies together and preserve their own position rather than necessarily doing what's in the best interests of the shareholders in Edinburgh Worldwide standing alone.
If we didn't feel that it was the best merger option, there's no way we'd have taken it anywhere near Saba. There's no way. And look, everyone will have different views as to what makes the best merger option. So this board actually did this in a very, very thoughtful way. And we considered the number of criteria that I mentioned earlier. We considered the risk that this was going to be predominantly US, not exclusively US. We're already predominantly US in Edinburgh Worldwide, by the way, where 3/4 of our portfolio is US based. So there's not a significant difference there. We were already moving up the market cap table as well into mid-cap businesses, and we'd announced that in Q4 2024. Historically, we had a $5 billion market cap on taking new positions, and we lifted that in Q4 2024. So we were already moving up the market cap scale because we saw a number of companies that fitted our philosophy, these disruptive tech, entrepreneurial, transformative businesses that were further up the market cap scale. So if we were true to that philosophy, then we were almost having to push ourselves up the market cap scale to get the most exciting opportunities on board. So for those reasons, it made sense for us. We also wanted a merger partner where Edinburgh Worldwide had an equal voice of the table, a similar size merger partner, rather than just getting subsumed into one of these giants, which I think would have not being consistent with what shareholders had told us last February. So having listened to the shareholders, having heard their excitement about the philosophy, we wanted something that was true to that philosophy. And by the way, just for the avoidance of doubt, Bailey Gifford are not enrolled for the foreseeable future. This board keeps Bailey Gifford under a watching brief all the time and expects performance. And if they're not performing, as in 2024, we review, and that review includes looking at alternative managers for the trust.
So when you spoke to shareholders a year ago, presumably you weren't talking about merging with another partner at that stage, and you certainly weren't talking about merging with another Bailey Gifford managed trust at that stage. So Are you telling me that the feedback you got from shareholders other than Saba was that they could see some logic in this proposal, even though it meant changing the mandate effectively of the trust?
So we didn't really talk to other shareholders until the back end of 2025. We wanted to talk to our largest shareholder first because they've got a block vote. If they say no, then this has no legs. I still firmly believe that as a responsible board and a proactive board, it was right for us to look at all options for future shareholder value. The path to growth strategy, capital returns, future capital allocation models, and potential mergers. We looked at all of those during the course of 2025. It was a very busy year for the board. And having heard feedback from Saba and having since had the opportunity to speak to one or two of our other shareholders about the proposed merger, I'm hearing a very clear message. People really like Edinburgh Worldwide as is. Therefore, merger discussions at this stage are parked. Once we're through the vote on the 20th of January, all eyes in 2026 will be on continuing the path for growth strategy and seeing that deliver for shareholders.
Okay, so just to reiterate then, that strategy, that involves making returns of capital, or offering returns of capital to shareholders at some stage, provided that you can get Saba to agree to what you're proposing. You could do more share buybacks, of course, but that only has the impact of allowing Saba to build their stake. They're at 30% now, so they are capped, but their stake could increase if you did more share buybacks. I'm right about that, am I not?
Absolutely right. And look, we've been pretty proactive in the last year on our share buyback program. So we've bought back roughly 6% of the trust through the course of 2025. So yeah, we're proactive on buybacks, but you're quite right. What I'm hoping is that if Saba hear twice, February last year, January this year, that shareholders don't want their go forward solutions, then we can talk to them about, a capital return at scale that would suit them and protect our other shareholders' long-term desire and excitement around Edinburgh Worldwide. By the way, if we were to return capital at scale, we would offer that to all shareholders just for the avoidance of doubt.
Sure. So I'm trying to see what the best outcome from your point of view would be. Obviously, you win this vote, you would defeat Saba's resolutions, but then there will still be, as there has been for the last 12 months, this continuing uncertainty as to what is going to happen to the trust and what's going to happen to Saba's shareholding. That's going to continue, right? That would have to continue until or unless you can come to some outcome that actually is acceptable to them as well as to other shareholders.
Correct. And look, one of our big tasks post January will be to engage with Saba to find out what their midterm requirements are, and see whether we can do something with them and collaborate with them in a way that we can offer to all shareholders. By offering a capital return at scale, they will have made a tidy sum out of this particular investment and return significant value for their investors. We hope that that book profit that they're sat on already, combined with the voice of the 70% of our shareholders in terms of their desires for the future, will make that an easier conversation this time round, and therefore start to stabilize the trust and take that future uncertainty out of the mix.
Can you tell us how much profit they are sitting on? I mean, we can't work it out precisely because we don't know exactly, I think, when they bought, which shares at what price. Can you give us an indication about that?
I can give you a very rough and ready view on it, which is they took a lot of their initial position, when our discount was trading either close to or in the low double digits. So compare that to the last 6 months where the discount's been trading at circa 5%. So they've made significant value out of the closing of that discount. They did buy more recently at a tighter discount because we've been managing quite closely during the course of this year. They've also sat on a period where our net asset value has significantly expanded as well. So again, just in terms of the last 12 months, the NAV is up over 20%.
Right, so they've made more than 20% basically on their position because of the discount
Correct.
and the movement in NAV. Okay, so I guess the one thing you won't be doing, though, as a board in the future, assuming you win this vote, is you won't be appointing Saba to manage the portfolio.
Look, I'm sure they're very good at what they do, Jonathan, but what they do is very, very different to what shareholders have bought into here at Edinburgh Worldwide. So, no, shareholders are here because they like the Edinburgh Worldwide mandate and they want to see it perform. They will hold us to task for seeing it perform. And if it doesn't perform, then we can talk about changing the mandate and all the rest of it. But for now, we take huge hope from a great start in 2025. We carry that into 2026 with real excitement around the portfolio. this sweet spot of what Edinburgh Worldwide shareholders have signed up to, this transformative, disruptive, techie businesses, is not Saba's sweet spot. Their sweet spot is discounted investment trusts. Just look at their other vehicles in the States. It's a very, very different sweet spot. So they would not be consistent and skilled to do what shareholders have signed into.
Right. But of course, they have, I think, applied to create a new ETF that would invest solely in UK-listed investment trusts, continue this strategy. And presumably, if they win the vote on January the 20th, they will put some at least of what could happen after that into funding that if they actually get control of the company. Is that your understanding or your fear?
Yeah, and look, if that's what shareholders want, that's fine. By the way, I think they can already get that elsewhere. But if that's what shareholders want, and that's what they tell us on the 20th of January, that is fine. But if shareholders don't, and they tell us what they told us last February, which is almost 99% of the non-Saba shareholders don't want that, if they say that again, then that's not the right path forward. We have to respect that and deliver to that shareholder desire.
I can certainly take home that message. Can I just then finally move on towards another specific of what they are proposing? They have proposed 3 new non-execs to the board after they, from their point of view, hopefully won the vote to remove you and your colleagues from that. First of all, what do you make of the list of 3 non-execs that they have appointed? Do they have any credibility as far as you're concerned?
Once again, I'm sure they're 3 very capable individuals. I'd say a couple of things. Firstly, none of them have got any experience in investment trusts. None of them have got any experience in UK listed companies. And this is quite a complex environment that we operate under, not least regulatory environment. So they don't have direct skills of that. I do question their independence, I'm going to be honest. And I know Mr. Weinstein said they are definitely independent. They're not employees of Saba, but they are appointees of Saba. And in my view, that does muddy the water. They haven't been through independent scrutiny, as you'd expect, from a nominations committee or some such. They haven't been under independent scrutiny. And I don't know how shareholders can get comfort from the fact that they're fit for purpose. I just don't know, because I don't think they've been presented with that information. So yes, I do question their independence, and I think it's easy to say they're not employees, therefore they are independent, but I think it goes further than that. We know one of them has previously been nominated 13 months ago to sit on the board of another investment trust, Herald. And therefore we worry about how they're going to make sure that they act as guardians of the 70% of shareholders that are non-Saba.
I think I read that you have also said in one of your recent announcements that you would be happy to consider having a representative of Saba on the board. Have I got that right? Did I read that correctly? Or that you would consider it? I don't know whether you said you were happy to do it, but you said you would consider it.
As part of our discussions in Q4 with Saba, when we knew this was coming, so back to your opening question, when we knew this was coming, there was likely to be a second requisition. We talked to them about board composition in a very preliminary way. Again, they didn't want to engage directly with me. And so those conversations never really got very far. But it is not untypical for a 30% shareholder to have some sort of representation on the board, but they never wanted to progress those discussions.
Okay, so it would be not worth my while asking whether you would be happy to, if they nominate any of these particular 3 individuals that are being put up at the moment.
Look, job number 1 for me is to get through the vote on 20th of January. Job number 2 is to sit down with Saba and say, right, let's agree on sort of a sensible way forward that suits their objectives, that is fair to all shareholders, and is based on what shareholders tell us on the 20th of January. And if we can tick all those boxes, then I'm not ruling anything in or anything out, Jonathan. I am up for all conversations. By the way, including my own role. I will only stay in this role as long as I think I can add value to our shareholders. So, yeah, I think anything's up for grabs. That means that we've listened to shareholders on the 20th and we carve a sensible path forward that delivers outperformance for those shareholders in an exciting and differentiated mandate.
And I suppose I have to ask you this question as well on the subject of directors. I mean, in their latest presentation, Saba do attempt to make some issue out of something that happened earlier in your career, about 15 years or 20 years ago. I don't know how long ago it was. Something that happened when you were the chief financial officer of HomeServe, which I think is no longer with us. What do you think about them bringing that up, and how would you respond to that? How will you respond to that if you get asked that question at the AGM?
Well, I think it's quite telling that they went down that route, actually, because I think it tells us a lot about how they intend to run their campaign and, the values within their organization. pretty low blow, if I'm honest, because it was an allegation about disclosure. And if they'd done their homework, they would find that there was no breach of our disclosure requirements whatsoever. So we fully disclosed exactly what we were supposed to disclose. This was a heck of a long time ago. And again, for the avoidance of doubt, to try and insinuate that I'm on the wrong side of the FCA is categorically wrong. I've never been on the wrong side of the FCA. They have never come after me directly in any investigation of theirs or in any way sort of named me in any such capacity. So it is just plain wrong. They looked at a significant period of time, what was actually a very, very successful UK company over a 30-year period. And this is barking up the wrong path here. This is just nonsense.
Okay, so I was inviting you to be offended by that, but you've answered that very clearly. Thank you. You could classify it as something of a smear, I guess. But that's something we'll have to raise with him as well. Why, as you say, he's chosen to bring that up at this point. On the point of your fellow director, just going through the list of points about the point of the fellow director who's served 9 years as of December, I think that's right. And therefore, beyond the recommendation of the governance panel, what's your reaction to that particular point?
Look, every AGM, we put ourselves up for re-election, and it's part of our Articles of Association. So, at this upcoming AGM, which will happen in the next couple of months after the requisitioned meeting, this particular AGM, I would expect fellow directors to put themselves forward who tick the right set of boxes that we need ticked. In the case of this particular individual, him and I have already talked about the future very sensibly. And we haven't announced anything yet, but we wouldn't typically announce anything till our annual report and notice of AGM come out in the next week or so. And then you can draw your own conclusion. And all I can say is this is a non-issue.
Okay, so that's brought us to the end of this conversation. It's very helpful to have you on the podcast, Jonathan. So thank you very much for that. As you say, it's an important vote coming up. I guess I'll give you a chance just to reiterate what your core messages are to shareholders. If they've listened this far through the podcast, they should have got the message, I think, by now. But why don't you reiterate what your message is and how you are going to be seeking to rebut those allegations, if you like, that Saba have raised?
Look, I've only got one message really here, Jonathan, which is I just urge shareholders to get out and vote. I firmly believe in shareholder democracy. I think shareholders spoke last February. I really want them to speak again because that will dictate the future of Edinburgh Worldwide. And if, like last February, they really like the thought of the future and want to see continued performance, then that's what we're about. So we need them to get out and vote. And the voting windows do shut earlier on the platforms as early as next Monday, the 12th of January. So the next week is critical. And I'm here to listen to shareholders and I want them to speak up.
Okay, so that was Jonathan Simpson-Dent, the chairman of Edinburgh Worldwide Investment Trust, ticker EWI, talking to me earlier this week. I'm hoping we're going to have a conversation with Vos Weinstein as well, so he can put his side of the arguments again, and we can grill him about those. But thank you in the meantime, Jonathan, for coming on. And those of us who are long-serving investment trust aficionados will be following this with keen interest, not just for the trust itself, but for the wider sector as well, what it might mean.
Thanks very much for having me, Jonathan. I've enjoyed the conversation.
Thank you for listening. The Moneymakers Investment Trust podcast is independently produced and edited and is freely available on YouTube, Apple Podcasts, Spotify, and other podcast channels. You can also sign up at money-makers.co to be notified of each new edition. If you want more news, analysis, interviews, and other investment trust content, don't forget to look at the Moneymakers Circle, available for a modest subscription at the website.